Hello and welcome to Trading the Trend. My name is James Boyd, and there's no green shirt here today. My wife took it from me. She says she's not giving it back for at least a week. So a little fun there. We had a little fun with that yesterday. If you joined us on the fundamental class, and yes, it was heavily starched. And hopefully those bulls will continue to wear that green shirt. I'm going to need you to wear your green shirt because mine's taken. So we'd like to welcome Kevin, Bill, Grace, Bob, BJ, Silas, Michelle, and many others. Welcome to all. We also have Brent Morris in the chat. We welcome him, a fellow instructor. Now, the question we always ask ourselves is, what trends are we riding? Now, that could be a bullish trend, a neutral type of trend, or a bearish trend. The goal is to identify the trend that the stock is currently in, okay, and then put on a strategy that matches that trend. Most of our examples might be bullish, but sometimes we'll talk about neutral type of strategies or trend, and we'll also talk about occasionally bearish type of trends as well and or strategies. And as we get started, remember that Brent and myself, we do post educational content on X. Feel free to join us there. Also, we do have some fun with that. If you ever need a little laugh, feel free to join us on X. Now, also remember that when we talk about options, options carry a high level of risk and are not suitable for all investors. When we talk about the information we discuss here today, it's provided for general informational purposes only. I also want to just kind of invite you, if you have questions of things that we've covered lately, days ago, weeks ago, let us know. We want to kind of try to include that today. I know I've covered a lot of material. If you have questions, let me know. Let's try to hit it right here and right now. Now, also remember this webcast discusses technical analysis. There's other approaches or ways to view the market, such as fundamental analysis, intermarket analysis, macro analysis. Do not think that technical analysis, that is the only lens in which the market is viewed through, because that's not true. And also remember that investing involves risk, including loss of principal. Now, when we talk about options, remember we'll bring up short options. Our options that we're going to be looking at here today are American style, which actually means those could be assigned at any time up to the expiration, regardless of the in the money amount. And also option Greeks, they measure a sensitivity to something. And when we also talk about upcoming workshops, you can go to schwab.com/events. Now, nice thing about the events is they're not just slated, let's say 2 months out in time. If you go to that website, schwab.com/events, it's for the whole entire year, okay? So feel free to go and take a look at that. Our next ones, besides Chicago this weekend, Ben and Barbara there, April 11th and 12th in Detroit, Denver, May 2nd and 3rd, and Anaheim, May 30th and 31st. The first day is focusing on technical analysis. The second day is on option strategies, and they are free. You invest your time to actually go learn in a live environment and meet other investors like yourself. So join us. Now, just real quick as we get started, we'll kind of take a look at where the markets are, any sectors that could be changing, anything in terms of, let's say, futures that might be getting a little push to the upside or downside. I want to go back and look at one thing just real quick to see on here. I want to see if there's just a quick disclosure, and I don't see it, so I won't go there, okay? I don't see it. So we're not going to talk about the futures. Thought that the disclosure was there, but it's not. So let's go ahead and take a look at this. We'll talk about it in terms of indexes. So first off, let's bring up just real quick the VIX, okay? Now, we're not going to say the market has gone up thousands of points off the low, but it's a start. Volatility, though, kind of always like it when there's a red shade on the VIX, okay? Lower volatility. And if you look at that lower volatility that we've had as of lately, we've had an up day yesterday, and then a bearish engulf right back down. Slight upward day here today so far, not massive, 38 cents. But what you're going to see is not changing the shading of that moving averages. And so VIX kind of still kind of sliding down. Now, the one thing that you notice kind of so far is the VIX is still kind of holding so far at 20. So there's still kind of a lot of things externally going on. Investors might be willing to pay a little bit more for those puts, perhaps. Wouldn't be surprising. Maybe the VIX doesn't come down to 15, 16 like it normally does, or potentially could. Maybe the VIX stays a little elevated, maybe 18, 19, 20 or so, until some of these things are undone externally that we've been dealing with. And some of those things might have been tariffs and Ukraine and Russia and so on. Things that could cause the market to go up a lot or maybe down a lot. Kind of like to kind of see some of those things kind of maybe closer to an end, okay? And we'll continue to watch that. But I think going forward, probably wouldn't be super surprising to see the VIX stay a little bit more elevated. Just to repeat, if we said the VIX normally gets down to around 15-ish, you might say that maybe the VIX might get around 18 and maybe stay just a little bit higher. If it goes down to 15, wouldn't be a bad thing. We're just kind of expecting the volatility to maybe stay a little higher. Now, if we take a look at this, the SPX, how's it playing out so far? The higher low, which we're going to mark, kind of the markers on the chart, we got 55.58 being the first support level. If we look at the higher low level, higher low we can easily see, because when you look at the higher low, you're looking at the red and green candles side by side. And that's step one. Circle the red and green candle. We did. Step two, draw a line from the open of that green candle. So the marker that we'd like to see the index stay above is 56.28, okay? That's an easy way to really gauge where are the higher lows, okay? Who created that? I did, okay? When you track as many higher lows over time, you kind of see that same pattern, okay? Now, so when we look at the index here today, we're pretty much trading at par, okay? Kind of more neutralist, but again, still wanting it to hold that shorter term support level. NASDAQ, which we'll talk about quite a bit. Again, step one, going to circle the red and green candle. Step two, draw a line from the open of the green candle. And if we did that, it's going to be about right there. 19,570, the support there really being about 19,268. So when you look at the S&P and the NASDAQ, they're holding, not going to lie, we'd like it to be a little bit more bullish to the upside, as maybe some of you would like as well. I just want to point out just real quick, when you look at the Russell, smaller caps, some of us might not trade small caps. You might like larger cap style companies. But if you take a look at that, maybe a better sign that the smaller caps still staying a little elevated, okay? Maybe even a better sentiment than the other ones that we've looked at so far, the S&P and the NASDAQ. And if we take a look at the last one just real quick, the Dow Jones itself, we'd probably say the Dow Jones and the large caps and the small caps probably faring a little bit better than the S&P and the NASDAQ. Now, the interesting thing to note is when we take a look at the sectors here, when we talk about kind of which sectors have gotten a little bit of a push, we brought this up yesterday afternoon, financials in trend 2, okay? We also see that when you look at this trend 3, we also see energy, and you also see right there, let's say utilities, and you also see the S&P, which is the benchmark that we're using too. So there are a couple more that are getting a little bit of a push. Energy is in 3, okay? So kind of keep an eye on that. And I want to take a look at 1 or 2 energy stocks there. Now, the other thing when we talk about trend, it always goes back to trying to look for stocks that really have a green line on their 10-day moving average. The 10HC, H for hull, C for counter, the green color, okay, it just represents the color of the moving average. Script's not guaranteed for accuracy, confirm. And the number there is saying how many days has the moving average been green or red. In this case, if I went and go look at, let's say, discretionaries, it's been down for 16 days in a row. The color of the moving average has been red for 16 trading days, okay? So that's what that's showing. So if we said, hey, we're looking at base materials, it's been green for a day. Now, when we look at this as far as sectors, et cetera, you're going to see there's quite a few things that are green, which probably says there might be some bullish opportunity, okay? Now, James L. says, rut is usually a canary signal. I don't think it's a bad one, okay? Just let's say we don't trade Russell, hypothetically, okay? We don't trade Russell. What would us as investors kind of use the Russell for? Think it as far as our investors willing to take risk. If you buy smaller cap type companies that don't have as much capital and maybe international exposure, balance sheet size, income statement size, et cetera, you're really thinking that these companies could maybe do okay, and that the index level could bounce back to the upside. Now, it's a pretty bullish call, but I think you could say, yeah, could it be a canary in the coal mine? Yeah, we would agree with that, okay? Now, so if we also go back to Gina says, just real quick, could you give us those scripts? Now, I want to kind of just speak to this real quick, and then we're going to look at our first example. So if I go to, let's say, my X page, and I want to kind of show you just real quick, how do we read this, okay? Because I get some questions on this. So this is Gina and others, okay? So at the very top of my X page, there's what we call a pinned tweet right there. Now, don't worry, Gina, if you say, I don't have an X account, I'm going to still send you the scripts. I don't want to leave you high and dry, okay? I'm not that type of person. Now, what you're going to notice in this pinned tweet, if I click on it, you're now going to see, okay, down here at the bottom, there's the 10-hole counter, label counter, and you're going to see the 20-day hole label counter. Now, what you're now going to notice is on some of these scripts, so one will say on the chart, on the chart, on the chart in red, on the chart, et cetera. So if they don't say on the chart, then where do they go? They're for the market watch, okay? So now, here's the thing. You cannot copy and paste these. You actually have to, for example, maybe you have an extra screen or something like that, or you can just write it down on a sheet of paper, and we're just going to type in that script right there, and we're going to type in that script right there, okay? Because it's not a doc file, okay? So it's just a picture of my doc file that I cannot share, but I can share the picture, okay? Don't worry, it's not that long to even type it in. Now, let me kind of just share this with you, and let's move forward here. So I just want to make sure that there's been some questions on that. This right here is the 10-hole counter. Now, remember, with any script that you use, you got to at least have an understanding of what it's really trying to show. Now, when you right-click on the heading, it's going to say this Market Watch script displays the number of days the whole 10-day moving average has been sloped up or down. The background color of the cell signifies the slope direction, slope being the moving average, green for up or red for down. Boy, it'd sure help if you read that, okay? I'm just pointing that out again. Now, if we went to that 20HC right there, edit formula, let me share that. Now, anytime that we share this, you might say, well, that's a different link than actually what's on your X page. That's true, because every time I share it, that link is different, but it's the same, okay? Anytime I share that, it changes the link. Both should work. We go to setup, open shared item, the very top right, setup, open shared item, click, and there it is, copy and paste right there, preview, and then you label what you want to call that script, and then just import. Once you do that, go back to the very top, right click to customize any of these headings, and just go right to, let's say, customize. When you customize, what you're doing is you can change the column headings. What do you want to see? How do you want to see it? You also have to remember this is kind of more of a technical viewpoint, but if you said, well, James, I like to kind of look at things from a different perspective as well, I can also go down to, let's say, save workspace as, and I could just call it JB 2025. I could also label it as JB Fundamentals 2025. So you can have kind of different viewpoints and go back and forth on different screens that you want, okay? This is not the only layout that I have here, okay? Now, all right, good. Now, let's kind of talk about any other questions there. Now, I want to go back to just real quick a couple stocks. Let's kind of start with just real quick CVX, okay? Now, normally we don't talk about CVX, but kind of CVX has kind of had an interesting move as of late. Now, when you look at CVX, we're talking about it's a $164 stock. Let's go back and start by looking at the 3-year weekly trend, okay? And we're going to go to that D right there for the daily, go 3-year weekly, okay, right there. Now, when you take a look at this, I don't think anyone would say the trend has been unbelievable, okay? At least up, that is. Why are we looking at this? Well, if I went kind of back on this and I kind of said, hey, before this week, what was probably the line of resistance? Now, one of the questions we get a lot is, how far do you go back? And the answer is, as far as you can go back, where you continue to touch the highs or the lows to create support or resistance. Now, if we go back and look at this, we got that diagonal line of resistance, which that diagonal word has really been a theme that we said we were going to cover this week. On the bottom, if we said, hey, last week, as of last week, and then how far can we go back, we could touch a number of those lows. Well, this week, if we kind of take a look at this, there's kind of been like a symmetrical triangle, if you will, on that, and the price poking above. Now, I know what someone's going to think. Yeah, but we got horizontal here. Yeah, but we got horizontal here. Yeah, but we got horizontal right here. But the move starts, okay, when you break the diagonal. The bull flags start when you actually get above the diagonal line of resistance. Don't be the one or two people that actually finally realize that it broke out after it already reverses all the way back to the prior high or significantly off the bottom, okay? Just know that I told you, okay? Know that I told you that the bull flags start when you break the diagonal line. The pull starts when it makes the low before it breaks the line. That's a part of the pull. So one example that I want to take a look at here is, let's say the investor said, James, and we had this question yesterday, so let's just address this. Wonder if the investor said, you know what, I want to trade perhaps maybe like a CVX, okay? But I want to really do it not from a stock perspective. I want to do it, let's say, from an option perspective. Now, the question we had yesterday that I'm following through on now here today is, wonder if you said, I want to do like a long call vertical, which we're going to talk about here today, okay? Now, we know the information up top is this is stock information, okay? But if I come down here to, let's say, the 17th April, 2025, 28 days to expiration, if we chose something like the at the money strike. Now, we can even argue with this, is that really at the money? Because the stock currently is a lot closer to the 165. So I think we could push back and say that's probably the at the money strike. This is the in the money strike. Well, why does it even matter? Well, when you talk about you're buying the in the money strike, the break even is going to be lower, okay? And what we're going to do on this, since we can, we're going to right click on the ask of the 160 buy, and then what we're going to do is going to go to buy vertical. And if we did that, you're now going to see that we have, in this case, we're buying the 160, selling the 165. Now I'm going to kind of compare and contrast for just a second, okay? So if we looked at, let's say, buying in the money, the 160, the break even is at 163.13. Interesting note, the stock is already above the break even now. So if you said, look, I want to have a lower break even. Well, lower break even actually means a higher debit. And what you're now going to see is it also reduces the profit. Okay, so it's a little safer. Not that there's no risk, okay, but it's a little safer that the stock doesn't have to move up to get to break even. But wonder if you said, James, I kind of like it where the reward and the max loss, potential upside and potential loss, is really about the same. Well, if we did the at the money strike and sold the 170, the debit is 210. $5 wide strike. Now pay attention to this because I'm going to ask you to pick for me, okay? Debit 210, max loss, given a vertical. Going to go to confirm and send. And what you're now going to notice is the debit, that does not include the commission, which is right there. And we have a $5 wide spread, hence max profit 290. Now I'm going to ask you, would you like a higher break even or a lower break even? Higher break even or lower? Does it matter? Doesn't matter. Well, this one, I mean, stock's at 164 and change. Here's the break even at 167. We need the stock to go up about $2.80 just to break even, okay? So if you said, James, I've had bad luck lately as far as I need my stocks to go up, but they don't, and they come back down, the investor might say, I might do a in the money strike where the break even is lower. Okay, a lot of you actually saying take the lower one And remember, there's an offset to that, okay? If we did the 160, 165, what that really does is it gives us, we have a higher debit, and then we also, for that higher debit, there's a lesser maximum profit, okay? Now, you're going to see that on this trade, if we said, okay, we can risk $750, we could actually do really 2 contracts here. And we're buying 2 of the 160, selling 2 of the 165, confirm send. Now, when we do that, the commission adjusts for the 2 contracts. How much money is set aside, we can see that there. And what we're going to do is we're going to send that order. Now, if we went back and looked at this and said, okay, what does it look like on the daily chart? Just quickly, that's what it looks like on the daily chart. And the reason why we're kind of looking at this has actually been a pull where the price has gone up. Let's see, 1, 2, 3, 4, 5, 6 days now. Okay, 6 days. And it hasn't even gone down. Not yet. So it would be kind of normal to maybe say, could it flag back and maybe try to get a bounce? But usually when a stock actually goes up like that and it gets above the resistance, kind of wondering if this is maybe starting to breach, maybe out of an area of resistance that where it had been resistance before. Okay. Now, Dean asked the question, can we use the ATR indicator to see its moves? In what way? Okay. In what way? Now, just quickly, as I kind of get some more information from Dean, is what you're going to notice is as the price goes down, okay, the ATR tends to go up, right? All right. Then all of a sudden, when the stock actually goes up, what do you notice about ATR? The ATR kind of tends to flatten or drop, okay? And what you're now going to notice is, here's the price coming down again, ATR spikes up, price goes up, probably need a different market color, ATR goes down, price falls, ATR goes back up, and what you're going to notice is when the price has gone up lately, the ATR has declined. Now, I would like to kind of think of like ATR, perhaps maybe like, just think, now this is expressed in dollar terms, okay? I'll be honest, I'm fine with ATR as far as in dollar terms. I think many investors like in percent terms to level things out a little bit, but I'm not sure if we could kind of say that, hey, ATR could tell us something. If we're going to get a move to the upside, it's normal to see the ATR drop. Now, if you see the move to the upside, where the ATR is going up, 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 and spiking and spiking and spiking, we would say there's a risk of correction. We have seen that before, where the ATR is going up as the stock is going up. And that means there's big moves in the stock, okay, to the upside. And at some point, you kind of do get a breakdown. Look at Palantir, MicroStrategy, and many others to see that example. Speaking of Palantir, let's go back to Palantir for just a moment. Now, let me kind of give you a little taste of what I mean by this, okay? So you got to imagine, kind of take this with a grain of salt. Stocks is at $40, and the stock goes from $40 all the way up to 125. Well, as you go up to 125, just kind of give you an example what Dean was maybe thinking. The stock back here was at 70, and the stock goes up to 125. So when you look at ATR as far as like dollar terms, well, yeah, it should be going up because the stock price is higher. Some investors like that ATR expressed on a percentage for that reason. The concern becomes when the stock actually goes up, 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 okay? If that ATR is actually going up as well, you kind of might be getting to a point where there's a risk of it breaking down. And the reason why I kind of chose this is you kind of see that as that ATR is actually higher and higher and higher, and it stayed up pretty high as the stock fell, you're going to see that, you know, higher ATR doesn't necessarily always mean better. Watch for those trends. Now, why are we bringing this up now? Well, the reason why we're bringing this up is because Palantir, if you take a look at this, Palantir has an implied volatility of 96 on tomorrow's expiration. If we go out to the April expiration, it's 72, okay? Now, the current position is we sold the $80 short put, okay? And then we bought the 75. The position, 29% of the maximum gains so far, and that's what we have there. Now, what I want to do is I want to come back to this chart for just a moment And if you look at that, that's kind of where we're sitting right here. Let me kind of delete any of these lines so we can see it clearly, okay? And let me even take off volume because that was on from yesterday, okay? So here's what we have. Now, I want to kind of show this differently than what we talked about yesterday, which is setting up a pending order, okay? We are all guilty as far as saying, geez, I was watching it. I wanted to trade the bounce or the breakout, but I forgot. I had to take Buffy to the vet. I had to go to the dentist. My car broke down, whatever. I had to go to the grocery store, and I just missed it. Well, let's kind of take the thought we did from yesterday, but apply it to options, a pending order. Let's say the investor said, you know what, James, what is that? So the goal is we want to put on another bullish trade, but we want the order to trigger only when the price gets above a certain price level at any time in the day, at any time. Now, I'll show you a quick variation of that in just a moment. Now, we know if we look at the strikes now, 85, 80, and so on, these are the deltas where they are now. Now, what we're saying is, look, if the stock, we want the stock to get above 90, okay, to get in. I'm going to give you a hard question here in just a sec, so be ready, okay? Some of you get your AI out on your phone, and maybe it can help you here. Now, if the delta right now is at 28, and we say, look, sell the 80, buy the 75 when the stock goes up to, let's say, $90, would the delta be higher or lower? Would it be higher or lower? The delta right now is 28, okay? But would the delta be higher or lower? Well, if the stock goes up, there's a lesser chance of the stock to be below the strike price. So that delta is going to be, or should be, lower, okay? Now we could see if the stock went up, let's say $2, okay? The stock went up $2, gamma is the second derivative. You're going to see that this would be 27. If the stock went up $1, the delta should be about 27 if the stock went up $1. If the stock went up the second dollar, that $80 put is going to have really a delta of about 25. Now, if you said, well, James, I normally like to kind of sell maybe in the middle between a delta of 30 to 40, a strike between the delta of 30 to 40. If we did this and went the opposite direction, 41 currently, take 2 off, take another 2 off. If the stock goes up about $2 and you said I like to kind of target a strike with a delta about mid 30-ish, it's going to be the 85. Okay? So it seems high now, but if the stock goes up $2, the strike that would probably have the delta between 30 to 40, right in the middle, would be the 85. Okay? Now, just remember, delta, the change in the option price, given a $1 change in the stock price. Gamma is the change in the delta given a $1 move in the stock price. Think of the gamma as a statistical change, okay, given a $1 move in the stock price, okay? It's a little adding 2% up or down if the stock goes up or down. Now, if we take a look at this, I'm going to sell the 85, okay? And we just showed why. Sell the 85, we're going to buy the 80. Now, do not take away from this that, but that has a delta higher than 40. It probably won't have a delta of 40 if the stock goes up $2. Now, what we're going to do on this is we're going to go limit to a market, day to a GTC. Just like we did yesterday when we did buy stop orders, etc. We're going to put a pending order. I'm going to show it one way, and I'm going to show a little change of this. Click on that little gear right there, bottom right-hand side. I'm right here. Click on that gear. Now, many of you might say comments like, I like to get in when this stock does this. Okay, fine. Where's this? Now, what we're going to do is we're going to go down to where it says symbol right here, and I'm just going to click there. Just click. We're not typing in anything. Palantir. Go to method. Going to click right below method, and it says Palantir. Now, this is saying if Palantir is less or equal to. Now, I'm going to click on that, and I'm going to say Palantir. Now, notice that the little sideways V, greater than, we want Palantir greater than or equal to the price we type in. We're going to say we want Palantir to get above $90 or higher. Now, if you're like most people, and most people are, you might say, James, I'm not a math person. I have no clue what that says, okay? Now, you could read what it says down here. Mark price of the security is greater or equal to 90. So that's kind of helping us read that little mumbo jumbo formulation terminology there. If we say, I'm not that great at that, don't worry, don't sweat, it's right there. Now, wonder if you said, well, James, I really want to see that this is not, it's just some point during the day, but I want this to kind of be at maybe in the last hour of the day, today, okay? So if you say submit, you could also kind of vary this and say, look, I want to submit this order at a specified time. And you might say, look, I don't want this order good for maybe the next couple of hours. Maybe there's an announcement or something. And I want this to only be maybe at the end of the day. So you can specify when you want this order to be valid, okay, which is kind of nice. And also cancel it if it were not to meet the criteria that you wanted. We're just going to keep it Palantir. We want it at or above 90. And if it is, want to actually have that order added to the current position, and that is going to be selling Palantir, okay, the 85.80. And what you're now going to see is, do we know what the maximum profit is going to be? We don't, because we don't know what the credit is going to be. And if I don't know what the credit is going to be, I don't know what the max loss is going to be. Now, we could probably get an idea, okay, by just doing the math right on the trade tab or the analyze tab. Get a sense of what that credit or max loss potentially could be. Now, also remember that's going to influence the break-even price. Now, what has liquidity now does not necessarily mean that in a day or two that it's going to have liquidity. So you got to kind of monitor that. If this market just saw the VIX spike to 90 and the investor thinks the bid-ask spread is going to be 10 cents wide, that's funny. That's probably not going to be that way. So that's kind of the risk, is do not assume that the bid-ask spread's always going to be narrow. Market conditions, stock conditions can affect that. Be aware of that, okay? That's why you're watching the market. Now I'm going to go ahead and send the order, and there it is. Now, comment from LJ is regarding, hey, JB, you got the 80 short put right there, and you got the 75. That's true. We're layering on top of this, we're selling the 85 and then buying the 80. So the answer to that question is, do you have another vertical with 80 puts? If you said, you know, you got to, for example, tell me the truth, what's the problem with that order? Why is she asking that question? Well, because if I sell the 85s and we buy the 80s, then what is it going to do to that position? Why was LJ the only one that actually did that? Ask that question. So we can do this, but it really needs to be in a different account. Here we're trading in the IRA account. We just need to change this order to really the margin account, because if we didn't do that, it's going to knock that position out right there. Was LJ the only one who didn't get that? Okay, tell me someone else saw that. So what I'm going to do is, how long does it take to change that order? We're going to flip this, go to the IRA, go to margin. Now I'm going to go right back to the 85.80, sell vertical. How long does it take? Not very long. Here we come. Limit market data GTC. Click on that gear right there. Okay, now by the way, LJ is a redhead, and I've been told that redheads have a higher IQ level. I can't verify that. But if we said that LJ was the only one that got that, maybe she did take the trophy home with her today again, okay? Now, if we take just a little fun with it, that's not true, of course, but it's just having a little fun with the redheads out there, okay? Now, we're going to click on Save, Confirm, Send, and now what you see is it's in the margin account. So you don't have to worry about that one position being knocked out. Okay, good. Now, okay, good. Okay, so some of us miss it. Okay, it's fine, okay? Now, nothing's really changed. We're just going to put it in the margin account right there. Send the order. Now, I want to kind of go back to something just real quick. I want to look at a couple stocks that kind of stood out a little bit, okay? So one of the stocks that kind of stood out a little bit is Allstate. Now, we know that, you know, when people, you don't need a clarification on what they really do. They do property and casualty, okay? And so what's kind of interesting about this company is they take in premiums. And what they really, per regulation, it's hard for these companies to go out there and build a football stadium or have large capital investments for 5 to 10 years out, because they might need the money to pay out for the policies. What's the point you're getting at? Well, a lot of the cash that the business has tends to be short term. What's the point you're getting at? The thing is, investors like to kind of see that things are liquid cash, tied up, maybe making a small rate of return, but they see the large majority of the potential company could be based on cash, not something 5, 10 years down the road like NVIDIA. Maybe they're going to come out with a little chip. When you think about Allstate, these companies, they have to set aside, per regulation, a lot of the money set aside for the potential payouts, which in a short period of time, typically a year, they're going to know, do they get to keep the premium, or do they got to pay some of it out, or they got to pay maybe a lot, all of it out, okay? Now, when things go up and down in the economy, people tend to still pay, okay, what they want to protect, okay? Now, I think it's always a good thing when we take a look at this, go back to the daily 3-week chart, and you're going to kind of see that the comment that we made yesterday is, when things fall down, you want to be looking to see which stocks haven't really fallen down that much. Which stocks might be closer to the high. If they are closer to the high and the market's not, that's a sign of relative strength. You don't need any script to know that. You can just use your own eyes, which are 2 scripts used in combination. We see actually, when you take a look at all, getting a little push here to the upside. Now, just briefly, when we scroll down and take a look at this, this is a company where we go back and look at earnings per share. 23, they were down a lot. 22, they were down a lot. 24 really did quite well, $16.99, okay? Sales per share, revenue per share, $239. That's almost a doubling in 2020, okay? Now, the one thing is, you want to, when you take a look at this, is, they've at least grown scale. Now, how do you know that they didn't absorb or buy another company? They totally could have, okay? That's why you want to go look and kind of see some of their numbers. Did they buy another company, or did they organically really just increase the sales per share that much? If they did, that's pretty amazing, okay? Earnings per share, though, has been about par for about the last 5 years there. So something to kind of look into. Now, what I'm going to do on this one is, let's imagine the investor said, James, here we are with the stock right at the prior high. I want to kind of be thinking that maybe the price might stay above that 202 level and or the 205. Now, I'm going to do this a little fast, okay? Because we're kind of near time. Let's say the investor said, James, I think maybe we might try to stay up above the 205. Now, there's a 210, there's a 200, but there's not a 205. I'm going to go out to the Junes and say, do we have the 205? The answer is no, we don't, okay? Now, what I'm going to do in this case is, I'm going to widen this out a little bit. I'm going to sell the 17 Aprils, sell, and I'm going to go vertical here, and we're going to do the 200 and the 190s. Now, I'm going to ask you a quick question real quick. Is that enough credit relative to the risk? $1.32, 868, really low. If you went, let's say, back to this and said, are all trades that we look at, are the option trades? If we went down and look at the Junes, that one is still going to be, this could be possible, but you're going out to Junes. So my point in kind of bringing this up is every trade that we look at an option trade? Well, if we're trying to get certain numbers to match, criteria, and these were the strikes, this is, for many investors, this is not enough, okay? Per the risk, what you pay in commission, and so on. For some investors, they might say, that ratio there doesn't make any sense, okay? Take 132 divided by 868, doesn't make any sense. So what's the point we're going to do? Sometimes when you look at the option, you might say, I'm not going to do the option. I'm going to buy the shares of stock. So what I'm going to do in this case is I'm going to go buy custom with stop. And now what I'm going to do is, what's the current price right now? 210.36. Okay. So the reason why I'm doing this is some people think, well, if I know about options, I don't need to do stocks, or that's over for me. That was a point in my life where, and I'm telling you, that's probably not true. Okay. There's points or reasons why an investor would say, like this one, why an investor would say, I'm going to do the stock, not the option. Now, when we take a look at where that support level was, 202 and change, 202.43 less 2%-ish, and you're going to see it's 198.38. 198.38. I'm going to go back to this pool balls, percent, dollar amount, type in 6,500. What do we got? 30 shares of stock. 30 shares of stock, put it back in, and we're ready to go. Now, does every stock have to have a target? Okay. Maybe for you it does. For some investors, they might say, no, I'm not going to put a target on everything. Okay. So I got to stop GTC. And what we're going to do in this case is when I go confirm and send here at the bottom, I could say single account. If I had multiple accounts, why not? Some investors might say. If I click on margin, I can also, for example, just go over to the IRA and actually say, I want to put this in the IRA. Example given. Just kind of some functionality that we're looking at there. Send the order. Now, I'll fix that order here in just a sec. But if you look at that, going to go long all, and that stop, just to reconfirm, was at 198, okay, 0.38, 198.38. Now, a couple other stocks that we're also going to keep an eye on, okay? ICE is actually another one, Intercontinental Exchange. What do they do? Well, ICE and Cboe, what you're going to notice is one of the stocks we're going to keep an eye on. This is probably not the best cup and handle we've ever seen, but it kind of has that kind of little up and down. It has the cup, but it kind of has like two handles, okay, to it. Now, does that mean it can't be a continuation pattern? So what we're talking about is Cboe and ICE. What do they do? Well, when you go back to Cboe, it actually operates the options exchange. How do they make money? Okay, transactions being one of them. Okay, now if you look at ICE, what do they do? Okay, what you're now going to see is provides technology and data to financial institutions, corporations, government entities, and so on. And you're going to see that it's a clearing, okay, an array of derivatives contracts and financial securities related to exchanges and clearing houses. They do execution services, okay? And so these are two stocks that, for example, have, again, they're not just down and they're starting to come back. They're ones that have already taken out the prior high and or at the prior high. ICE and Cboe. Example given. Now, I want to also kind of keep an eye on GE. We said, hey, some of these stocks in the industrial area trying to get a little, now I'm going to use the word Lisa said, pokey. It was Bill Barnhoff, who we would like to kind of give proper credit to, of stocks that really broke through resistance or trying to. One of the examples that a technician might be looking for maybe tomorrow is, can we trade above the high of the low day, okay, of GE? Now we classify the low day as the lowest, most recent red candle, which sometimes, if it doesn't pull back that much, might only be one red candle. Keep an eye on GE, because when you go back and really look at the 3-year weekly, that is one that might be trying to set up that flag as well. And when we pull these up, these are not recommendations. These are examples of trend. The other one we'll just point out just super quick, kind of what is going on with CVS leaving Walgreens in the dust. CVS getting above a major Berlin wall of resistance, okay? Getting above 67, what is going on there? That's another one to kind of keep an eye on. And the other one, last one I'm going to kind of just say, you're going to keep an eye on as well, is Netflix. Talked about this yesterday afternoon. You're going to see that if you look at that, it's sold down today to the middle of yesterday's candle. keep an eye on that if it can get above 963. So we can't say there's not opportunities out there. There's some examples of trend here if you like to practice bullish examples. Now, I'm out of my time here today, but I want to also go back to something we mentioned before, which is if you go to the schwab.com/coaching, okay? If we do that and say, hey, can we see a list of other things that are taught throughout the day? Yes. Connie Hill, speaking of redheads, will actually be coming up teaching this class right after this on short verticals. Getting started with stock investing, Michael Fairborn, and after the close, Cameron May. So make sure that you bookmark that as well. Now also, Brent and I will teach tomorrow on ETFs. This is not a recorded session. Tomorrow morning on ETFs, Brent and I will teach that. Brent will also be teaching the advanced option strategies tomorrow as well. So join us there. Now also, last but not least, remember, you can find us right on YouTube, okay? And when you go to YouTube, you can just type in Trader Talk Schwab Coaching Webcast, and it will get you this page. If you have not subscribed yet, it will just show right in the middle of the page, subscribe. And when you subscribe, it doesn't cost you anything. It allows you on your subscriptions on the left-hand side. Think of subscriptions like anything that you're following. And it's like TV programming. You click on that and it shows any post videos that were done on this channel. That's the functionality there. Now, thank you so much for your comments and your participation. Try to include those questions as we went through here today as well. And also remember that with what we discussed, it was done for example, illustrative purposes only. Be mindful of the risk. Always be thinking about position sizing and what those exits are before entering the potential setup. Now remember, also, I want to wish you a great day. Stay tuned for Connie Hill coming up next. And feel free to join Brandon and I tomorrow morning on ETFs at 9:30 a.m. Eastern. Take care. Bye-bye.